Well, it's 10:30 a.m. sharp here in the Seattle area and 1:30 on the east coast of the U.S. So it's time to get started. Welcome. Looks like we got a pretty good crowd in the room today. So glad to have everybody here. Hey, Stefan, good evening to you. Yeah, it's probably middle of the night for you over in Sweden. All right, so I'm Dean Jenkins, founder of FollowMeTrades.com, and this is our special live trading room for the FOMC meeting announcement, which is going to come out in about 30 minutes. So it typically causes some dramatic market moves, and it's always fun to watch and see if we get some trade setups here. And so that leads us to a quick disclaimer that everything presented in this room is for education and information purposes only. I am not a financial advisor, don't want to be one, and I don't know your individual circumstances, and I'm not giving investment advice. So any trade or investment taken by any individual is solely their responsibility. And again, I'm not giving investment advice. I'm explaining and demonstrating my trading rules, and if I get a setup, I will demonstrate the trade on the live markets here. But again, each individual's decision about taking a trade or an investment is strictly their own and their own responsibility. So again, we're here in preparation for the FOMC, the Federal Open Market Committee's announcement on what are they going to do with interest rates. And the expectation from the market is absolutely nothing. That the overwhelming consensus is that the Fed is not going to do anything with interest rates until after the election. So they are going to have another meeting in December, and there's also an overwhelming consensus that they would raise rates then, next month. And so the volatility around today's announcement will probably be the language in looking forward about what's the probability of a rate increase at the end of the year? Is that increasing or decreasing? If they do surprise everybody and announce an increase in this session, there'll be some fireworks for sure. All right, so we got about half an hour, and what we'll do during that time is take a look at the charts, the current trend. We'll look at the broad market. I'll explain the trade setup that I use for a volatile market, for a news release like this, and answer any questions you have, look at any symbols you'd like to look at, offer my analysis on them, and again, any trading questions in general or about our services, happy to do that. Okay, a good way to get started, make sure you can find, there's a questions panel, a questions box, and a chat box on the GoToWebinar control panel. So make sure you can locate the questions box so that you can type in any questions you have. So why don't you start off just by typing in where are you calling from? City, state, country. We usually get a really good distribution, and it's always interesting to find out where people are, where you're sitting, where you're calling in from. All right, here they come. Las Vegas, Colorado, Peterson, New Jersey, Allister, New York, Seattle. Well, Gary, you're just up the road. I'm here in Olympia, Washington. Appalachia, Toronto, Canada. Dale says thank you for this session. Well, you're welcome, and he's calling in from Phoenix. Kelowna, BC. I was just up in BC this summer, took a nice motorcycle trip up through BC and over to Ontario and then down into Montana. Waterloo, Canada. All right. That's a pretty good distribution. Again, Stefan is sitting in Sweden. All right, so I'm going to type a question into the chat window and go ahead and respond. Make sure you can see the chats and then go ahead and respond Okay, so I'll type a secret question in. There we go. There, it's in the chat window. And go ahead and give me your answer to the question there. Let me know what your opinion is. Jim, we're not going to look at Forex today. We're going to be watching the S&P 500 E-mini and gold. These are the primary instruments we watch. We also trade oil in my live trading room. My analysis techniques, my training materials, all that work on Forex just fine. But I don't trade Forex personally. I've got my capital tied up. All the trades I need are in stock options and futures, so you gotta cut it off somewhere. Samita on a cell phone, so don't see the chat window. That's a bummer. Hopefully you can see the presentation anyway. So the question was, do you think the Fed will raise rates in this meeting? And overwhelmingly, everybody so far has said no. No, 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 no. But Dale says he's ready if they do. Good. It's good to be ready. Good to have a plan. Will says, if one is long gold now, we should get out before the announcement, right? That's what I do, Will. If you're, if it's a day trade, you're an intraday trader. The problem is when the announcement comes out, particularly if there's something surprising, the price can move dramatically. And, hopefully you've got a stop. I sure recommend trading with stops. And the problem is it can hit your stop and you can get tremendous slippage, when there's a big spike around the news. And it can totally go against you and, stop you out for an unexpected loss. And then it could even come back and go the same direction. You could just get knocked out in the volatility. So I don't personally want to sit through that. All right. Yeah. So that's what I do. So let me show my charts and explain the layout here. I know several folks here are new, haven't been in my trading room before, so I want to make sure it's clear what we're looking at, what we're doing. And feel free, ask questions at any time. So I'm showing on the right-hand side the S&P 500 E-mini futures contract. We just call it the ES. On the top is a 5-minute chart. So the 5-minute chart gives us a pretty good picture of the intraday trend, and sometimes even across a couple days. And you can see clearly in a downtrend today, down about 10 points so far. We had some nice short trades this morning in our regular trading room. The bottom is a range chart. It's a 5-tick range chart. So that's 5 ticks on the ES is 1.25 points. It moves 0.25 points per tick. And so I really like range charts for a very short interval, a pretty granular view of price movement. And I like the range charts because there's no time element, so it just shows price movement. So the way range charts work is a new bar is painted every time price exceeds more than 5 ticks in this case. Okay. Over on the left, I've got gold. The gold futures contract, again a 5-minute chart showing us the bigger trend, and then an 8-tick range chart down below. The gold moves in 0.1 ticks of 0.10. So the 8 range seems to be catch the kind of moves I'm looking for intraday. Since ES moves with a bigger tick value, we have a little bit smaller range on that. So that's the chart setup. And then I've got a very specific setup I use. I've got setups I'm looking for during normal times, and I use a combination of Ichimoku Cloud and Elliott Wave. and I'm looking to catch specific legs, impulsive moves or corrective moves. I want to trade, it's a kind of a combination of swing and trend trading. I want to be with a trend or a wave for as long as I can, right? But around the news, when I expect some volatility, I've got a unique short-term setup, and I'm going to show you that now. It's almost a scalping move, but it's a way to play volatility. So here's the setup I look for, and I call this my use the news or post-news setup. So here it is for a short trade. What we look for is an initial impulsive move as the news comes out. There's typically a volatile move, and then if we get a retracement into a Fibonacci zone of 38.2 to 61.8, and if the trend then continues and we get proof of that with a lower high, new low, then my entry would be, an aggressive entry would be right here, right? Oh, there's my, right? So an aggressive entry would be up here, and then a conservative entry would be down here, because if we get an initial impulsive move and a correction, and then proof that it's heading down in that original direction, there can be a real trend that we can try and catch here and trade. So that works out pretty good. So we're going to look for, a move, retracement, and then the next leg down. We're going to try and trade this next leg down. And so I'll demonstrate that if we get the setup. We don't always get it. So sometimes it appears and sometimes not. Sometimes it's just chaotic, and I'm not going to trade a chaotic market, right? Or it may just trend forever, right? And those are kind of hard to jump into. When's it going to end? You never know. So that's what the short setup looks like, just the opposite for a long setup, right? Big initial move, a retracement into Fibonacci zone, and then higher high, higher low, new high, and an entry, an aggressive entry down here, a conservative entry up here. So when you get these setups, these are really high probability trades. So again, they may not appear, but we'll be looking for it, and if it happens, I'll demonstrate that trade. Well, I'll take it. So that is how that works. I am recording this too, so if you want to look back at that later, I'll email out the link for the recording after the session and after the video is rendered and posted and all that good stuff. All right, so we got about 18 minutes until the news is scheduled to come out. So while we're waiting for the news to come out, I'll take a look at the broad market. Here's the S&P 500 on a daily chart. There's something really interesting going on here. So first, let's go look at a little bit higher time frame. Let's look at this on our weekly chart. So here is the S&P 500 on a weekly chart. And if we just scrunch it a little bit more there, we can see the start of this rally back in 09. So it's been 7.5 years, an incredible rally. But now you look over, the end of last year and this year, classic signs of consolidation up here at the top. And particularly now, it looks like it's rolling over and we are losing momentum, even on the weekly chart. So a normal, healthy correction as part of just an ongoing normal market cycle would have this thing retrace down into Fibonacci retracement zone. And I'll get my pen out and draw that just a little bit, make it a little bit clearer. So here's my handy pen, get the right pen width, color, right? So we expect it to retrace into this zone here. This is a Fibonacci 38.2 to 61.8. It's covered up there by price. But that would take us down to 1674 to about 1365. again, that would be a normal, healthy, ongoing market cycle correction, not the end of the world, although the financial press will be, claiming that, right? It's always pretty dramatic, but that would be where we expect it to once it gets started. Now, is it showing signs that it's getting started? It actually is. Let me show one more thing. Let's look at this real quick on a monthly chart. So there is the S&P 500 on a monthly chart, and this is going back to, let's go back even farther. Let's go back 30 years. Let's look back, early 90s. So, because saying, hey, we think the market's going to go down to 1674 to 1365, that sounds kind of dramatic. But in the context of, an ongoing market cycle, not really. It's not really that bad, right? When you look at these other market moves, here, 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 here. So this doing this, well, that just kind of fits, right? That's not out of character for the long-term pattern of the market. And it really looks like that could be starting pretty soon. The other thing that's interesting to note is that these declines are shorter in time than the up moves. They're more dramatic and they are shorter. They happen faster. So we could probably expect that to happen again. And for those who are prepared, there's a lot of money to be made in a market that's going down dramatically in price and doing it pretty quickly. So let's go back for a minute to the daily chart. So we have a pattern up here at the top. That is, I'm going to expand it so we can see it a little more clearly. What's going on up here at the top of the S&P 500 over the last couple months? Now, Dow theory tells us that trends move in an uptrend. It is, we can see it here, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and that an uptrend continues until that pattern is broken, and then lower lows, lower highs, lower lows, lower highs are put in. So do we have a pattern of lower lows, lower highs on the S&P 500? Well, yeah, we do. Lower low, lower high, lower low, lower high, lower low, lower high, and just yesterday a new low. So we've absolutely got a downtrend, just according to the definition from Dow theory beginning. And we're also, I use Ichimoku cloud. We have broken through the cloud and we are down under it, which can also signal a trend change. And then if we pop this up, let's undo my exaggerated deal there. Look at the oscillator. Look what's happening to momentum currently. And I'll blow that up just a little bit so we can see it. So we've got momentum. Let me get the right drawing tool here. I can't draw this very well. So from here to here, momentum on the up moves decreasing, and we've got momentum on the up moves, or the down moves, increasing. That's pretty significant. That's called bearish divergence. So even though the trend was up, for the last, through this year, hard to call, hard to look back at this year and go, wow, it was an uptrend. But as it was continuing up, the momentum became very bearish, and it continues to do that. So we combine the bearish divergence with this Dow pattern, and it really looks like we have a downtrend starting, and this could be the big one that takes us down to those retracement areas that I talked about on the larger time frame charts. So you can disagree with me, but or you can agree, but I think that's my opinion based on analysis, and I think it's pretty sound. Using that same technique, we were able to call the decline back in last summer and at the end of last year. And we traded these dramatic down moves with great profit. We also called the up move in gold this year, traded that, and the up move in gold earlier, or oil earlier this year. So these tools work. They do a really good job of telling you, when the trend has changed, where it's going. And then I can use Elliott wave, very simple, repeatable form of Elliott wave to come up with target zones for a corrective wave or a trend continuation, an impulsive wave. So if you got any stocks you'd like to look at, we got about 10 minutes. So want to use the time productively. Look over here, there's nothing. I don't think the market's going to do anything. Look how the ES has started channeling sideways. Gold. So until the announcement comes out, there's probably nothing going to happen. Everybody's waiting. So if there's any stocks you'd like to look at, we'll do that. Frank wants to look at lumber liquidators. I don't want to look at it. So we were long lumber liquidators, and it ended up, it was a great corrective pattern. This is what we call a wave 4 trade coming out of this channel. Big, huge move down. Gosh, where was the top of this thing? Up over 70 bucks, channeling down here in the teens, and it looked like it was going to break out and get into a corrective wave. So we got long this. We had moved our stop up, so we lost a couple $100. Not bad, right? Very, very small loss because of the way we control risk on this. But it is broken down through the Ichimoku cloud on some bad news, and so it's negative now, and I wouldn't trade it at all. If it gets back up above the cloud, maybe. ESZ for Alexandre. Oh, and EWW for Lolita. So let's ESZ. You sure that's the symbol? I typed that in, nothing came up, Alexandre. Let's look at EWW for Lolita. EWW, iShares, Mexico capped ETF. So not my favorite chart, Lolita. Not my favorite chart. And the reason is there's not it's in a downtrend, obviously, but it's so choppy. It's so choppy. There's not a clear pattern here. And it's just swinging up and down, up and down. There's not a real good wave pattern that we can get a count and predict where it's going to go next with high probability. So when I see a chart like this, I just move on and try and find something else. Okay, FEYE. So let's see how this is a much more orderly market. It's not chopping all over the place like the other one was. Now, there's a definite impulsive downtrend here, and what we're looking for is to see when it would retrace and begin a retracement. Now, it's under the cloud, so it hasn't proven, with higher highs, higher lows, new highs, all that, hasn't proven that an uptrend has started yet. It tried, but never got going. So we would look for it to get up above the cloud and have a clear pattern, but if it did, then the retracement on this could be really big. Up to, let's get the very low there, up to this range here of 26.47 to 35.79, which could be a pretty nice gain. If you're, we wouldn't be getting in until it's up about here, really proving that it's getting started, and there'll be enough return left on that. So that's one to keep an eye on for sure. Yeah, you're welcome, James. Absolutely welcome. Ron would like to know any thoughts about UUP. It's a mess, Ron. It's a mess. So there's UUP, the dollar ETF, the fund, the bullish dollar fund. Yeah, it's untradeable right now. If somebody asked about Forex earlier, now there are some good Forex charts, and if you like trading them on longer term time frames, let me show you this. Again, same method applies. So I really like the pattern. So this is a corrective wave trade. So this is a USD JPY, so the dollar to the yen. So big, huge drop, and it is showing evidence right here that it's above the cloud. We got higher highs, higher lows. This is showing evidence that this trend is starting, and it's got some pretty nice room up to the price target there. So USD JPY, and then the other one was USD US to Canadian. This is pretty nice. So this one is this is an impulsive wave. So that's even better than a corrective wave trade. Because what we had was a big impulsive move up here. We would measure it from here, right into the expected retracement zone. And now we've got the next impulsive wave showing that it's beginning up above the cloud, higher highs, higher lows, all that, and a nice target range up into this zone between 1.45 to 1.56, basically. So that's actually tradable right now on a daily chart, USD, CAD, US to Canadian Forex. So that's pretty cool. Frank, CLDX. Let's watch our time too. Yeah, Celdex Therapeutics. So we're waiting for proof for this corrective wave to begin, and if we ever get it, we get above the cloud, higher high, all that stuff, higher low, then we expect a retracement up into here. But it hasn't started yet, so nothing cooking yet on CLDX. Worth watching. Well, we're getting close. We're at 10:56, so let's pay attention here to these charts now and see if we can get a pattern as the report comes out. I'll go ahead and stage my chart trading tool, so if we do get a setup, we can fire off a trade. So what I do is take one contract initially, and if the trend shows strength, I'll scale into it. I'll add once it's confirmed, particularly on this on a volatile move like this. Right, I'm doing this to demonstrate this trade setup. That's the primary objective here. You are welcome for those ideas, Ron. Glad to share them with you. Anybody who's here, is this your first time ever in my live trading room? We have the live trading room going every morning, Monday through Thursday, but I do these special sessions around big events like the FOMC meeting announcement. I'm thinking about doing one for the as the election results come in. That's going to be kind of a long, that could be several hours, waiting for results and when they are able to call it, but that's going to cause some fireworks for sure. I'll talk a little bit once we get past the release here about what I'm doing for the expected volatility around the election. But we're real close here to the minutes release, so let's see if we get a big move. Yeah, Marco, a little bit unusual. Now the meeting announcement is not like oil. Um, Oil, they're just looking for one number. What's the inventory number, up or down? Like today it was crazy, right? This, people have to parse through the message a little bit. So I'm watching the chart real carefully here. Anybody watching any news snippets or live blogs or anything about what's being said? I mean, what ultimately matters is what we see on the chart. So that's where my attention is. James, what's the indicator? You mean this little trading window here? Yeah, that's built into TradeStation. It's called chart trading. To just enable it right there. Allows me to place trades and OSO orders right on the screen. I can place them just by clicking on the screen. It's pretty nice. And I can drag my stops and stuff. Pretty nice feature. Ninja's got something similar. So we didn't really get a volatile initial move on either one of these. What we've got going on here on ES is a continuation of the existing trend. And I'm going to go ahead, we're one tick below the previous low, so I'm going to go ahead and take that. I'll take that trade. I'm going to put my initial stop above that previous high. Get a little better resolution here on it. Now there's a bit of a risk because we're not through the volatility yet, but it's long enough afterwards that I'm comfortable doing it. There, I got my stop. One tick above the previous high. I'm also watching my Ichimoku cloud, and I've got an escape hatch. If I'm looking for a setup here, and if I get price crossing over this purple line and closing above it, I can take an early exit and just bail before I hit my stop. That means there's a good chance that the trade's going to fail if it does that, and I can know it early, take a smaller loss. So we didn't get a big pop. After the news. And it is unusual. So they must have said nothing about nothing. Ron's asking about options trading on bonds as TDT. TDT is a good instrument to trade if you get a setup, right? If there's a good pattern. We'll look at that in a minute. I want to watch this trade real close here. See how gold isn't showing any signs of continuing that trend yet. Look at these three highs right here. 3 times it's come up to this level and has not broken through it. And we're at the end of a very long trend up here. So not too exciting about going long on gold. Now, if it started a pretty good correction, that might be exciting. So any news or blogs or anything on the Fed meeting announcement? unchanged. Recent growth, respectable through employment, not accelerating. Assessments from the latest Beige Book are not pointing to a rate increase, with wage growth described as modest and general inflation as mild. So I think what they're saying is maybe not even in December, eh? That's the language people are going to be looking for. And there's a bigger statement. This is Bloomberg's summary. But this is the most passive response I've seen all year. Nuts. We were all here ready to go, waiting for some fireworks, and nothing happened. It's okay. We can't make the market do what we want, can we? You can show up and be ready. Here we go. There, we got a pyramid. So I'm going to trail my stop down to that new pyramid, which the pyramids are just calling off. Those are from traderscoach.com from Bennett McDowell. Remember I talked about lower lows, lower highs, so that's lower low, lower high, new low. So it's calling off special lower low, lower high sequences where the ratio of the down leg is greater, the momentum of the down leg is greater than the up leg, and he's got a unique and proprietary algorithm to measure that. Rob says, back to the election watch. Yeah. So I'm thinking about it, just an informal poll. How many people would be interested in showing up for an election evening trading room, watching the markets? All right. What people instantly typed, yeah. Okay. I think I might do that. It might be fun. We would be very careful to not, I make it a point not to make this is a trading forum. We talk about the market. Of course, politics and elections impact the market, but that's where we focus our attention. So it's not a partisan thing. So we're not going to be celebrating or grieving any of the election results. We'll be looking at the market response to that in as objective a way as possible. Clearly, the commentators, many commentators, and vocal public figures like Mark Cuban say that if Trump gets elected, the market's going to crater. I think there's enough uncertainty, and again with the market cycle that I showed earlier where we were at, that I think we're primed for a correction regardless. Now, one or the other candidate gets election, there may be a momentary pop one way or another, but I think once we get past that uncertainty, that the correction is going to get started with some real gusto and a real genuine down market that's just going to be, again, wildly profitable for those who were prepared. And it's going to be really, really painful for the buy and hold crowd who are going to see their net assets decrease 30-40%. There's no reason for that. It makes me kind of sad. Well, this trade's working out pretty well, isn't it? So again, it wasn't my trade the news setup that happened. It was just a trade continuation, my normal ongoing trading tools. There was no real big reaction around the news, but trading these impulsive portions of trends, I'm good doing that too. Look how gold's doing absolutely nothing. It's at the top of a trend, probably going to start correcting pretty soon. So this is just the kind of trade we take day in, day out in the live trading room. If you are interested in attending regularly, we're here Monday through Thursday, 4 days a week, from 6:15 to 8 a.m. Pacific time. That's 9:15 to 11 Eastern time. $27 a month. And we do the same thing we did here. We do market overview. We look for trade setups on the E-mini, on gold, and on oil futures. And we take a look at some stock picks and ideas as well. So if you're interested, let me pop you a link here. If you'd like to join the trading room on a regular basis, we'd love to have you. There you go. There's a link in the chat area. So we got stopped out. We made a small profit on that one. Maybe our volatility's coming back. I was talking too much, and I told you earlier I was going to add a contract and scale in, and I should have, and then I would have taken profit down here at the bottom. I was too busy talking, and I should have been trading. So that's my normal method, particularly as we got this pyramid. I would have added a contract, and then at this reversal, taken profit on it. So that should have been a bigger winner, but I was distracted. You know, the other thing I got going on is tomorrow night I am kicking off a Master Trader small group training course. It's going to go 6 weeks. I'm going to teach Dow theory, Elliott wave theory, the exact tools and setups that I use. We're going to talk about options, picking the right option contract, Ichimoku Cloud, risk management. 6 weeks of intensive training. You get access to all the study materials, recorded training videos, and then live training sessions. And if you're interested in reading more about this class, I'm only going to take on 10 students, so limited seats so that we can have personalized, you know, in-depth training with all the participants. And we got a couple seats left, but they're filling up. So if you're interested, I put a link up to find out more. And you know, I'd love to have the class be full and have you there if that sounds like it'd be interesting for you. So read that link, check it out. Master Trader small group training. And the training applies to any instrument. It can be futures, it can be Forex, stock. We're going to talk about options at any time frame. So I'm doing my analysis here on a very short intraday time frame. Same thing we do on the daily charts, whatever. Frank would like to look at VRX. Okay, I'm watching if the ES finds resistance up against this cloud on the range chart and heads back down, we might go short again. And gold has broken through on the range chart, but it hasn't proven a downtrend yet up on the 5 minutes. So let's watch that. Maybe a little early to try and get a short on gold. So for Frank, let's go look at VRX. And this is, oh, Valiant. Yeah. So Valiant hammered today, down 11%. If and when, we got to expand this just to see what's going on. It's so dramatic, right? Compared to, you know, the dramatic price move. If and when this thing ever starts to take off, it could, you know, once all the bad news is over, and there's concern about the election and, you know, prescription drug cost, and Valiant was the poster child for that. If we get past all that and it starts up above the cloud here, the potential for this is huge. I mean, the retracement area is way up here, over 100 and goodness, over $100, between 100 and 160 bucks, right? But it's not there yet. Got to keep watching that one. It's not ready yet. James says they're being investigated for fraud. Yeah, and there was news all along about, their pricing, and it became an issue in the presidential campaign. My opinion, of course I want, the drugs people need to be affordable and they can get the drugs they need to cure whatever ails them. But, a lot of the political rhetoric, kind of ignores the realities of, what does it take to bring a drug to market these days? That's hundreds of millions of dollars to get a drug to market, and not all of them make it, right? And the testing and the liability they have, so no, they shouldn't be gouging people, right? And whatnot, but there is the other reality side that it is an expensive business and it's a risky business, right? You can bring a good drug to market, or what we think is a good drug, and how many commercials do you hear? If you took this drug, call us now. You'll hit the lottery. Ron says, hey, Trader's Coach is coming out with 2 new indicators at the end of this year, and they look pretty interesting, pretty promising. Will they include the pyramids? No, the pyramids are a standalone indicator that you have to purchase separately. But those, the new indicators, I'll have them, and I'll be showing them in my trading room while we're doing our thing later. James says, for VRX, new Justice Department charges against the execs that might make it hard for them to get credit and recover. It could be. So we would want to see clear signs of recovery on the chart before we took a trade on it. So gold. See how the oscillator down here just turned red. So that's telling us that the trend may be changing. Now it's down into the cloud. At the end of such a long uptrend, we expect it to correct at some point. Now, the conservative thing to do would be let it clear the cloud. But if you wanted to take an aggressive short, all right, we do have the oscillator turning red. So you could take a short on this now. That would be a very aggressive trade. I would put the stop there. But don't be surprised if it finds some support and goes back up one more time. But so that's aggressive. I would wait for a more conservative entry. You'll get you won't get as good an entry price, but you'll have a higher probability on the trade. And I'll trade probability for a few ticks of entry. John says, IWN appears to be the leading indicator for the overall market. He's been making a killing off it. Well, good. IWM is a bond fund, right? It's like TWT, only different. Oh, the Russell. Okay. It's the Russell. Gotcha. Yeah, so the Russell is showing even more marked downtrend, more so than I was showing on the S&P 500. So you could be right. There are theories that say, the Russell leads the NASDAQ leads the S&P, and the S&P leads the Dow, right? That they kind of move in that order. Could be. Those are interesting theories. They can draw my attention to particular charts, but I make all my trading decisions on the actual charts themselves, the realities, right? The only reality in the market is price and volume. Those actually happen. Everything else is speculation. And price and volume give you very clear patterns that when they do form patterns, they can give you a high probability prediction for what's going to happen next. Well, I mentioned that I'm going to, so I have a stock pick subscription service. People subscribe to my service, and I publish the actual trades I'm taking on stocks and options. with my own money in my own account, real live trades, and people follow along. And we've made good money for a number of years now, and we're having a pretty good year this year, even through a tough market. And later this week, like probably Thursday night, Friday morning, I'm going to be publishing a special and unique position that I'm going to take ahead of the election, right? And it's to try and capitalize on the expected volatility of the election, either direction. So I've posted a link. If you're interested, you can take a trial on my stock picks for $7 for 10 days. So you'll get this new pick that I'm going to be taking. If you sign up now, you'll get it. And then you can decide whether you want to stay with the service or not. So $7 for 10 days. After that, it's $97 a month. And I even offer a money-back guarantee. You know, during this 10-day trial, if it's not your thing, I'll give you a 100% refund. No questions asked, no hard feelings. So if you're interested in some great stock picks that are making money, we provide stocks and then option trades that parallel those picks. So some people choose to trade with options. I like trading with options. Some people like to buy or sell the shares. You can do it either way for the same picks. Give the parameters for both ways to trade. So if you're interested, you can check out that link and take a trial. Well, this was kind of a non-event, huh? I thought we'd have at least, you know, a pretty good dramatic move there. I'll be watching ES. If it crosses back down under the cloud, we continue this trend down, I'll go ahead and take another short on it. We tried once. We had a small win. I think we made one tick on it, so we didn't lose anything. That's all right. And if I'd been paying attention and following my method rather than talking, we would have actually made a nice little profit on it if I'd have taken the extra contract and scaled it out. Yeah, so gold's heading back up a little bit. Yeah, I would definitely wait for it to bust down through this cloud on the 5-minute chart and then see about a short. And that could happen today. And it's got a fair amount of room to correct. This is a big trend up here. So a correction to this trend would take us down. Well, we got to go find out where it started, huh? So there we go. Boom, boom. Correction on this take us down into here. 1296 to 1289. Simita, which link are you interested in? I gave 3 of them. The trading room, the stock picks, and the small group training master trader. I'll email you all of them if you want. Okay, you bet. You bet. And I'll send it out. I'm going to send a copy of the recording to everybody who registered. And I'll include the links in that email as well. So we're coming up on 11:30 Pacific time. That'd be 2:30 Eastern time. So it looks like the fireworks didn't happen. Nothing dramatic. So I think we'll wrap it up at the half hour here. So a good time. If you got any other questions, feel free. Happy to look at any charts or answer any other questions that you have. Boy, look at ES. So now this is pretty interesting. It almost made it. Let's see if it blasts through the Ichimoku cloud, or if the cloud provides some overhead resistance and we reverse down and continue this trend. Could go either way. Rick. Rick says some hot day you were, yeah, all dressed up. We showed up and nothing happened, huh? I'll try harder next time, man. James, what's the indicator that gives the total buys and sells? That's just part of TradeStation's chart trading. And that's not total buys and sells. That's instantaneous. It's basically useless, I think. TBT options. Well, I'll make timer on. We'll look at that, and then that'll be it. We'll wrap it up. So here's TBT. So any option, any discussion about options starts with an analysis of the underlying shares. So TBT, it's the ultra short layman 20-year treasury. So they've been beaten down. This is the short, right? So that kind of makes sense. So, but this trades at good volume, 2 million shares. So we're expecting this to get up into this range. It's the recovery is starting, right? The recovery is starting, and we expect it to get up to 3807, up into 43. That's the corrective wave range that we expect on this. So what option contract would we use? So it's moving pretty quickly. It's about halfway there. So I would want to be out at least 3 months, preferably 4. So let's see what they offer. So we've got January and March. I like the March. I would go with the March. January is a little too soon. Okay. We're looking for a call. And so using my analysis method, I like the 31 strike. So 435 bucks. 435 bucks per contract for the March of 2017, $31 strike on the TBT. And if we were to buy 5 of those, so our stop on this trade would be here at 38.80, and our target is 38. 30.80, 38. So let's just see. Say we bought 5 of those. So my profit at 38 would be 1,600 bucks. Okay, I would be spending how much? I'm not actually buying it. I'm spending 1965. All right. Oops. What happened? So I'm spending 1965. So my profit at 38 would be to get it right, 38, would be 1672, and my loss, if it gets down here to my stop at 3080, would be 1,000. So a loss of 1,000 or a gain of 1,600. So that's a 1.6 reward to risk ratio. So that's not bad. And at the high ender, I could, nearly double my money. So that's not a bad trade. That's how we do it. If you want to learn how to do that, everything I just showed you, analyzing the chart, picking a stop, picking a target, an entry price, confirming it, picking an option contract, all that. If you want to be able to do that in less than a minute, take the course. Master Trader Small Group Training. 6 weeks, you'll be able to do that too. The link is there. Okay, let's go ahead and wrap it up. Thanks everybody for showing up. I won't apologize that the market didn't move because I'm not responsible for what the market does. But we had fun anyway. We looked at some good charts. We tried to trade. We didn't lose any money, and I got to meet some new folks. So thanks for being here, and take care. And I hope to see you in a future session. Have a great day. Be careful. Trade safe. Always use risk control. Keep your losers small and your winners big. Take care. Bye.